Good morning, everyone, and welcome to the McLean County Chamber of Commerce Member Ed on the Employer Retention Credit. We're joined today by Nicole Allen with Insight CPAs and Financial PLLC. I think I got all those acronyms right, Nicole, to discuss a credit taken on employers' payroll tax returns and calculated for qualifying wages paid to employers from March 12th of 2020 through June 30th of 2021. This credit that we're going to talk about today was previously not available to those businesses that received a PPP loan, but recent legislation is now opened this opportunity up for those who have also received the PPP loan. So Nicole is going to talk to us today about the employer retention credit. And so we're going to jump into that. But before we dive into that topic today, we want to recognize our April video sponsor, the Shirk Family Foundation. By sponsoring our educational programs, the Chamber is able to provide our member eds and town halls to our membership for free of charge. So we are excited to have Shirk Family Foundation be our April sponsor for our video resource library. All of our member eds and town halls can be found on our video resource library, which is located on our McLean Co. Chamber website. So everything is being recorded today, and then we will share that out on the video resource library for folks who want to go back to it or who missed today. So feel free to join us there. Again, we'd like to thank all of our sponsors for our video resource library. So Shirk Family is who we are recognizing for April, but we have others for the video resource library as well. So we are excited to have Nicole. I'm going to stop sharing my screen and I'm going to allow Nicole to share hers. And so we're excited to have Nicole here to talk about the employer retention credit. If you guys do have questions, Nicole and I will be manning the chat here on the Zoom, but we also have folks who are joining us through Chamber Chat. And so if you guys want to drop your questions into that chat as well, please do so at this as we go through the presentation. So at this time, Nicole, I am going to turn it over to you.
Fantastic. All right. Well, I'm very excited to be here. This is my first time doing one of these Chamber member ed talks, so excited to do that. Do a lot of other speaking things and sharing a lot of this new stuff that's been out there. And this past year has been an abundant amount of new stuff. So it's a lot of information for business owners to synthesize. So that's kind of what I try to do is work through all of what those changes are and try to get it in a form that I can present it over to people to capture that information and do the best they can with it to get it to work for their business and help get some funds flowing during these times when there's some unknowns and things that are going on with all of the COVID things and all of that. So thank you, Jancy, for the introduction and the kind of brief overview. I think she nailed it right on the head of the summary of my presentation today. But for the employee retention credit, we're going to kind of talk through some of the details, why it's a big deal, why I really want to push this information out to folks, because there's a lot of money on the table and don't want people to miss out on these opportunities. So a little bit about me. I went to ISU, got my master's over there, so local from the area, enjoying that. I've been a CPA for over 10 years now, so that's a milestone. And then I also do some adjunct work prior to my second child over at Milliken, and that's just a fun thing to do too, and share that knowledge, and kind of goes with all of what I like to do. So that's just a little bit about me. So let's get right into the employee retention credit. So what is it? What is the employee retention credit? So this is a credit that you're going to be able to take if you meet the qualifications as a reduction of your payroll tax expenses on your 941 payroll tax returns. So when you go to file your 941 payroll tax returns, you can do these calculations to see if you are eligible for the employee retention credit, the ERC, and potentially get some refund back or reduction of your future payroll tax payments that you may be making on those quarterlies and your withholding for all your employees. So looking at the dates here. So this is wages paid from March 12th of 2020. This is kind of when all of the COVID shutdowns and everything started happening. So that's a key date as far as this credit goes. And they recently extended it through June 30th of 2021. So those are key dates to look at this point to see if you had employees during this time and you paid your employees, this is something that may pertain to you. So there could be money on the table for you. And, you know, despite the fact that maybe you've already filed your payroll tax returns, there's opportunity for amended returns, and we'll kind of talk about that a little later. But if you paid employees during this time, pay attention. This talk is for you. There could be some money on the table for you. So there's two different credit amounts. There's an amount for 2020 that ends up being 50% of qualifying wages paid up to $10,000. So the max credit in 2020 per employee is $5,000. So that's kind of where 2020 fell with those credits. For 2021, they got a little bit more generous. They realized that this is an opportunity out there, way to get funds into the economy. So they changed that where they upped it to 70% of qualifying wages with a maximum credit of $7,000 per employee. So that's up to $14,000 in wages. What they also did is, instead of that being for the whole year, they said you can take that credit of $7,000 max per employee per quarter. So if you qualify for those quarters, and we'll talk about what meets those qualifications, you could get up to $14,000 per employee for first and second quarter if you qualify under the parameters here. That's a lot of money. You know, if you've got, you know, a handful of employees that you're paying at least $14,000 for a quarter, that can add up really fast and more than cover a lot of those payroll taxes that you've had to pay in. So definitely a big deal. So why else is this something that we're paying attention to now? And why are we just now getting excited about ERC and this credit that's out there when it was qualified from wages from March 12th of 2020? So the big news with this credit is that previously, if you had a PPP loan, you couldn't qualify to take this. It was one or the other. So a lot of business owners made that decision that I'm going to take the PPP loan. It's going to be fully forgivable. You know, based on the parameters of what's going on, you might get more funds that way by doing the PPP loan. So when we talk through with our clients and talk through the scenarios of, okay, what's your potential credit look like versus what your PPP loan look like, almost every single one of them, it made more sense to do the PPP loan. So this was just something that wasn't on a lot of people's radar, because most businesses were going to benefit more from taking the PPP loan and potentially getting that full forgiveness for those qualifying expenses. So that's why this wasn't really on the radar. There wasn't a whole lot of information out there. It was just kind of, you know, there people could use if they qualified and didn't take the PPP loan. So again, just not on the radar. Now, with the passing of that legislation at the end of the year, end of 2020, they changed that. And not only did they change it going forward, they changed it retroactively. So at this point, if you received a PPP loan, you are still eligible to be able to take the employee retention credit. So that is why this is such a big deal now, that these funds are available. A lot of people already filed their payroll tax returns for 2020 after the fact, after they released this and said, hey, you can actually do both. So now people can go back and amend payroll tax returns to capture these credits and get some refunds back or carry those forward as well. So that's why this is a big deal. And that's why looking at those dates and what that looks like is something to pay attention to, because if you had employees during that time, you may qualify. All right. So how do I qualify? This is one of those potential things where, you know, as accountants, we like to just deal with numbers, where we can crunch the numbers and say, okay, yep, you qualify. This credit also has a little bit of interpretation of closings and who was closed for business and things like that, where it's not necessarily just a numbers game, not just an accountant's analysis of if you meet the qualifications. So that does open up the door for some interpretation of if you qualify or not, even if you don't meet it with financially the numbers. So let's kind of break it down between the 2 years. We'll look at 2020 and then we'll look at 2021 and kind of compare the differences there on what those qualifications are, because they are different for each of the years. So for 2020, your business would either need to have been fully or partially suspended by a government order due to COVID, or have had a 50% decline in gross receipts for a calendar quarter compared to the same quarter in 2019. So when we kind of break that down, let's look at the gross receipts test first. So if you're in 2020, maybe you're looking at third quarter of 2020. If your total gross receipts, the amount that you're collecting before any of your expenses, so your top line income, did that decrease in total for that quarter by more than 50% of the same quarter in 2019? So if you're looking at third quarter 2020, compare it to third quarter of 2019. It's trying to get an apples to apples comparison of, pre-COVID, have you significantly declined in your revenue 50% to get you to qualify for this credit? That's a pretty big decline to hit that qualification there. Unfortunately, some businesses have had that, so they're meeting that qualification. But the other option for qualification is if you were fully or partially suspended by a government order. So what that means is, were you forced as a business to reduce your capacity, limit the number of people that you were in there, or potentially were you forced to shut down by a certain time and only be open for certain hours so you could shut down to do cleaning and things like that? And it's not by your choice as a business owner. This is, you had to be forced by either the local government or the state, and what that looks like. So restaurants is a perfect example here. If you were a restaurant during 2020, you were fully or partially suspended because of a government order. There was limitations on restaurants being open and, number of people, capacity, all of that. So in that quarter that you want to qualify for this credit, were you fully or partially suspended? And that's where all the interpretation is coming from a lot of these too. What does that actually mean? Where does that fall? So from that standpoint, that's where each scenario might be a little different, and looking at what those rules are for you and how you might qualify. That's where you might want to reach out to somebody if you're not sure and kind of get some clarification there. But it's an either or, either you meet the gross receipts or you are fully or partially shut down due to a government order. So it's not just a numbers game. There's some different opportunities out there that you may qualify for the credit. The other qualifier here for the credit is what wages qualify. So your qualifying wages are going to be any wages that you paid, with an exception of some related individuals to the owners. But if you had 100 or fewer employees, any of those wages that you paid are going to qualify for the credit calculation on this one. If you have 100 employees or more than 100 employees, you only get to count those individuals that you paid that weren't working for you. So if you had over 100 employees and you continued to pay people because you wanted them to have money, you wanted them to continue to operate without going on unemployment, but you didn't require them to come in and work. They didn't work from home. They didn't, do anything for you, didn't provide any services. That's kind of that threshold. So if you had over 100 employees, it's a little harder to get that credit for 2020 if people were actually continuing to do work for you, just kind of whether it was remote or whatever, that kind of is that stipulation there. So that's how 2020 shakes out. So let's look at 2021 because it does change a little bit here. So just like they were getting generous with the credit amount of, going from $5,000 to $7,000, and then also allowing it per quarter, what they also did is they allowed that decline in gross receipts from 2019 to be 20%. So a lot more people potentially could be hitting just based on financial information. If your total revenue that you had went down 20% in first quarter over first quarter of 2019, you can qualify here. And that's where you want to take a look at what your wages are and kind of incorporate all that together and see if you're going to qualify. The other part for 2020 that's a bit more generous or for 2021 over 2020 that's more generous is the number of employees you have. So they bumped up the employee count to 500. If you have less than 500 employees, any of those wages that you pay to your employee, whether they're working or not, are going to count. So that 500 threshold is you only get to count wages that you paid to people that weren't working for you. So they were sitting at home, you weren't telling them what to do, and you still paid them, then those wages can qualify for this credit. Okay, so some other considerations for the employee retention credit. So a lot of people are asking, well, okay, that's great that I qualify here, I meet some of the parameters. How do I actually capture this credit? What can I do to capture this credit? So what you're going to do is when you file your quarterly 941 payroll tax return, there's a couple different boxes that those wages and credits go in. So a lot of people use QuickBooks or maybe some other kind of accounting software or service to do those. It doesn't automatically usually pull in what those wages are. I've seen some where they have kind of a questionnaire before you start preparing the 941, like QuickBooks, they'll kind of walk you through a questionnaire and ask, okay, did you pay anybody qualifying wages for the employee retention credit? And you'd have to put in the total amount of wages that you paid there and kind of how that breaks down. So it doesn't automatically just do it for you, from what I've seen. You've got to kind of have some of that input and tell it that, yeah, I qualify, include this on my return. So when you go through and people are filing their first quarter payroll tax now, so this is kind of a timely presentation. If you've already filed it, there's still hope for you. It's fine. If you haven't filed it yet, this is something that you might want to take a look at and see, are you going to qualify and what does that look like? So, and the 941, if you've looked at it from prior years to this year, it's grown in the number of pages. At a minimum before it was 2 pages, now it's up to 5 pages plus an extra worksheet to calculate credits and all that. So it's a little bit more in depth this year. But there's really 2 spots that it's going to show on your 941. It's going to show in your part 1, line 13D, where we've got a refundable portion of the employee retention credit. And that's from a worksheet 1 that's part of the 941. And then you're also going to put, your qualifying wages on line 21 of the 941 return. So there's a couple different spots and a worksheet that kind of walks through how we calculate that credit. And every system that you use is going to be a little bit different. So I'm not kind of going through that length of discussion here. Just wanted to give you that overview of, hey, look and see, if you put something into your system or your software to generate that form, is it showing on the return and are you actually getting the credit? Like, was there a box that you maybe missed to check or something like that? So when all is said and done, you fill out the 941s, and if you've paid all your payroll taxes already, you're likely going to get a refund status on your 941 return, an overpayment essentially. You're going to have 2 options. You can either get that refunded directly, so where the IRS just cuts you back a check, or you can carry it forward to your future payroll tax deposits and offset future payroll tax deposits. So kind of get a break from paying in those payroll tax deposits until you exhaust that refund. So there's a couple considerations that we want to talk about there. The first one is, okay, are you generating a substantial refund with these credits? Because it can be substantial. Got some clients that for 2020, they're, $300,000 plus in these credits. So that's a big chunk of money that shows as a refund on your return. The potential issues there, there's always audit risk when you're taking that much of a credit, which isn't a bad thing. If you're doing all you're supposed to do and, crossing your T's and dotting your I's, it's an auditable thing. There's no issue there. But if you are having a larger refund amount, a lot of our suggestion at that point is to carry it forward to offset those payroll taxes versus getting a check cut back, because we don't know when those checks are going to come back. How long is the IRS going to take to process those refunds to get them back? They're supposed to do it quickly, but the IRS has not been very quick this past year, I would say. So, depending on what that refund amount is and what that looks like, that's kind of that discussion to maybe have with your accountant or, who's doing your payroll on, okay, should we maybe just carry this forward and we'll be able to capture that cash flow by not having to make those payroll tax deposits? That's a consideration there too. So something to think about, depending on how much your credit is, what we want to do with that. But not always the best just to get it refunded. So just kind of keep that in mind as well. Okay, a couple other considerations that I wanted to point out for this as well is, so we've talked about how you can do a PPP loan and the employee retention credit now. So that is doable. However, you can't use the same wages to qualify for PPP forgiveness as you do the employer or employee retention credit. So you can't double dip on the wages that you used. So before all of these changes with ERC, our big push and consideration for our clients was, okay, PPP loan forgiveness, the whole thing you paid in wages over that 24-week period. That's the easiest thing to do. You don't have to show any documentations. It's just going to be a lot easier. You can give your payroll reports, check the box, you'll be good to go. After they made these changes for ERC, we had to reevaluate PPP loan forgiveness, where we wanted to get the smallest amount to qualify as wages for PPP loan forgiveness to hit that 60% requirement and get all your other expenses forgiven with the other qualifying expenses to maximize the amount of wages remaining that could qualify for the ERC. So it retroactively changed our thought process, and a lot of banks at that point kind of shut down accepting PPP loan forgiveness because of all these changes. So if you've already submitted your PPP loan forgiveness and took all 100% to payroll, you can't go back and change it now. You just can't change your loan application for forgiveness. If you haven't, and you might qualify for the ERC, that's where things get a little bit more complicated as far as getting qualified for the forgiveness and also capturing your most maximum ERC that you can get as well. So just kind of a consideration there. Also, if you paid employees with the family paid sick leave wages where you captured that credit that was available for that, you can't double dip on that either. So basically, if you benefited anyway from some wages paid and getting any kind of credit for those wages, you can't double dip and get the ERC. So you just kind of got to separate those buckets. You can get both, but not on the same wages. So just keep that in mind. I've also mentioned it that if you've already filed a 2020 payroll tax return, or even now you've submitted your first quarter 2021, that's fine. You can go back and amend to capture that refund or that credit carry forward for federal purposes. So there's still time, there's still the availability to do that. So it's not a urgent rush that there's a deadline to get that done. Sometime this year, you can get it done and get that refund back or applied to your future payments. So keep that in mind as well. Also to add that there's certain wages that you do pay maybe to a related person to an owner of the business, and those are not going to be eligible for the ERC credit. So you can count those towards your PPP and kind of split how you want those to go, but they're not going to qualify for the ERC credit. So that's just something to kind of keep in mind there as well. So, and that is the highlights of the employee retention credit. So basically, if you paid wages during that March timeframe to now and through the end of June, it's an important thing you want to consider, especially if maybe you got the second round of PPP. Now you might want to think through, okay, am I going to take the ERC first and then use my PPP money and get my qualification for that? So a lot of different cogs kind of going in the machine here as far as how to best capture and get the best benefit out of these to help your business. So that's all I had for you guys today.
Wonderful. Thank you, Nicole. Just a reminder, if folks do have questions, you can drop those in the chat. For anyone who's joining us through Facebook, the Chamber Chat group, I am monitoring that function there. And then anyone who has joined us on the Zoom today, Nicole and I can both see those chats. So hopefully you guys can drop stuff in there as well. If you do have questions, Nicole, as we're kind of looking for those to come in as people are thinking of questions, can you go over just one more time, abbreviated, what the credit is for 2020 and then what the credit is for 2021 for those points there?
Yep. So I'll just kind of hop back here. So for 2020, it's a maximum credit per employee of $5,000 for the whole year. In 2021, it's a maximum credit of $7,000 per employee per quarter. So, and that's just a percentage of wages paid. So this is kind of that key takeaway here. If you're going to do a screenshot or write something down as far as what those qualifying credits are, $5,000 per employee for 2020, $7,000 per quarter per employee for 2021. So substantially increase in 2021.
Wonderful. Thank you. Yeah, that is a substantial increase in 2021. If folks wanted to get more information on the employer retention credit and what that is and kind of just to read up on it, where would you recommend they go for that? So
you can always Google university. There's always information out there, but be careful on where you go site-wise. The IRS has some of the best information, if you can believe it. They've kind of given some more digestible information out there on how you can qualify. So that would be my suggestion. Or if you go and look and see blogs or articles that are by CPA firms or those notable sources that are out there that are really in the weeds and know what they're talking about versus, maybe not a Forbes article or Wall Street Journal. Sometimes those can be a little bit misleading, but IRS is definitely high on the list of where that information can come from.
Wonderful. And if folks wanted to reach out to you for clarification or just to get more information, is that available? Are they able to contact you?
Yep, they can feel free to give me a call or shoot me an email and I can get some information to them or point them in the right direction on what they need to do.
Wonderful. So as folks are looking at this and they're looking at the employee retention credit, what are the top two things folks should really understand about the ETC?
Yeah, so the first one is don't be in a hurry to submit your PPP loan forgiveness if you haven't done it yet. You've got time, and that's going to have an impact on your available ERC credit. So PPP loan forgiveness doesn't have to be in until 10 months after your covered period. So a lot of those don't come up until June and July is when those applications need to be submitted. So take a look, make sure you're comparing and getting the best benefit for your business out there. That would be one of my key points there. The second one is making sure you know if you qualify or not. Don't just discount yourself from a revenue standpoint. Maybe your revenue skyrocketed this past year because of your industry and what you're doing. But if you were shut down or limited capacity, you still might qualify even if your financials may have even been improved. So that's kind of the weird thing on this credit. So that's what I would say. The two major things is don't just discount it thinking you don't qualify. You may qualify for it.
Thank you. There is a question that came in the chat. I don't know if you can see that one, but for our folks who are joining us online, the question is, has there been any guidance on the gross receipts calculations and how to add/subtract the sale of fixed assets, or if that should even be included?
So sale of fixed assets, I mean, it's a specific thing. And if you're in the industry of selling fixed assets, that could have a different game changer there. But my interpretation would be that's not part of your normal gross receipts for your business. That's kind of a one-off scenario there. So if, you know, again, it's kind of particular to each person's situation and what you've got going on, and kind of maybe digging in a little bit more on the IRS side. But in general, from an accounting standpoint, those items aren't included in your gross receipts on your financial statement. Those are, you know, you're figuring out your gain or loss on a sale of fixed asset scenario there. So it's not part of your normal operating revenue. So that's what I would say to qualify on that one, is that to compare it without including the sale of fixed assets, because that's kind of a different beast outside of your normal operations.
Thank you. And Andrea, I hope that addressed your question. Next question came in, and it says, our company had a 20% reduction in fourth quarter 2020 compared to fourth quarter of 2019. Does that make us eligible for the first quarter of 2021? So
your qualification is the quarter that you have the reduction. So if your reduction was in 2020 and you grow back in first quarter and you are over, you know, you don't have that reduction, you kind of disqualify yourself there. But there are some different things in the meat of the ERC where you could potentially get that to qualify depending on, you know, what the scenario is there. So by the general rules, no, that wouldn't qualify, but there might be something in there because they do have some, you know, carryover, and when you meet that, you know, you get back up to your level in 2019 and what would qualify there. The other thought would be, you know, maybe it's not a revenue thing for you. Maybe it's, you know, government shutdown and limited capacity and that kind of thing that might qualify you versus just the numbers.
Ben, I hope that addressed your question. If folks do have questions, please drop those in the chat as we go through. But for now, I don't see any other questions coming in through our chamber chat on Facebook. And I think that was our last question from our Zoom participants. So Nicole, thank you so much for your time today. We appreciate it. We are always excited to learn new things as we get into some of these new tax situations for our employers. So we appreciate you taking the time and appreciate everyone joining us today. If folks do have questions, Nicole is happy to help you walk through those. More information, as she said, best place to find that probably IRS website, going straight to the source for those things. So thank you again. This concludes our member ed for our employer retention credit. Again, any information can be found through the IRS or through Nicole's company, which is CPAs, I'm going to get it right, Insight CPAs and Financial PPLC. So feel free to reach out to them. The Chamber would once again like to recognize our April Video Resource Library sponsor, Shirk Family Foundation. Because of their generous contributions, we're able to provide our members with informational sessions free of charge. So make sure to check out our Video Resource Library at McLeanCoChamber.org. So thank you, everyone. Enjoy your day. We appreciate you joining us. And this concludes our session.